Markets are on the move today. Bitcoin, of course, getting a little bit of movement here. And I think a lot of people are starting to take a look at maybe what's happening over in DCG, their camp, along with some of the other market conditions that are starting to play out ahead of the FOMC. We're going to dive into all that good stuff with one of your favorite traders out there, Gareth Soloway. My name is Paul Barron. Welcome back into TechPath. Joining me today, of course, is Mr. Gareth Soloway, coming in as Chief Market Strategist from In the Money Stocks. Make sure and check them out. Nice to have you back.
Hey, great to be back, Paul. Hope you're having a good new year.
It is. Started off well. Market volatility back in, it feels like, almost like trading time again. So we're back in the game. Hey, let's get into a couple of things. I want to get your opinion on the DCG Genesis scenario that's happening. Here was one of the headlines. Genesis preparing to file for bankruptcy. Now looks like this is going to happen. With that being the case, and you look at the potential of what it has in terms of Gemini, but also in general, is this big enough of a black swan event to create some capitulation in Bitcoin based on what we've seen over the last few days in terms of trading? What are your thoughts on that?
Yeah, it doesn't seem to be that big of a concern to people. And again, I just follow price action. So if you look at the chart, it's clear that we've had this amazing rally in Bitcoin. We've gone all the way back up to the FTX kind of beginning point where that began to kind of collapse. And that's where the resistance point is. So I think this is an area when we go into Genesis where it's going to make people maybe stop and just pause. Let's see how it plays out. But so far, We're definitely not seeing a major panic of any sort coming through here.
Yeah, this is the scenario of whether or not we'll see the contagion effect like what I don't know that it is necessarily to the level of what the FTX debacle was, because this is a typical bankruptcy proceeding, which is going to go into normal bankruptcy actions. Sure, it may have some bleed effect into some other areas of digital currency group. Obviously, the trust is one of the biggest areas, and that being such a big cash cow, I think is what everybody is concerned about. I want to jump over to your Bitcoin chart and look at some of the things that have been happening. One, if you look at the run up and the comparison of what we've seen right now, and I've been following some of the tweets you had out on Twitter, what is your theory right now in terms of the current price action for Bitcoin right now in terms of running forward, or are we looking at a sideways?
Yeah, so let's jump into the chart here and see what we have. So we can see that there was this wedge pattern from the collapse of FTX, and then we went in a very, very quiet range. And one of the little notes that told us there was going to be some volatility was that we saw volatility in Bitcoin. I think it got to the lowest it had ever gotten. And anytime you go into this sleep mode, there's this tendency to wake up with a bang. And we certainly saw it here. You could see the breakout occurred right there. And as soon as that happened, there was kind of this melt up or bear market rally. Now, the reason why I'm calling it a bear market rally is that until we take out key levels, this is just a run-of-the-mill rip your face off rally. And I know that sounds crazy to a lot of Bitcoiners and crypto people, but if you look at other markets, the S&P, the NASDAQ, even stocks like Tesla, a bounce of 25, 35, 45% in a bear market is actually a relatively common occurrence. So as of now, I think we've rallied about 30, 35% in Bitcoin off of the lows. At this point, we still haven't taken out the psychological level here, which was the FTX high. And you can see how the price is stalled there, right? And we're even seeing a little bit of a pullback today, although we're off of the lows. But for me, at least, this is, as of now, it's a bear market rally. I have to treat it as such until we start taking out key levels such as this FTX high pivot.
Gareth, what would be some of the key points that you're watching in terms of triggers that would indicate for you, all right, we could see the downtrend come back, or we might see another level achieved? Is there anything you're watching closely right now on Bitcoin?
Yeah, so definitely that FTX high pivot, which is around 21,500. Psychologically, there was a lot of damage done. We know about all the news media, that the coverage that SBF had and the FTX collapse had. And I think on a psychological basis, if we can get price above and hold above that level, that then would then create kind of this confidence in Bitcoin, in cryptocurrency. Another thing that I'll be watching for is, honestly, I want to see where this regulation is coming in. I want to see when this is coming to fruition. If we get regulation and price doesn't dump out and make new lows, I would then say potentially the lows could be in. And the reason I say that is because as soon as we get that regulation, it should create forced transparency. And forced transparency then creates the ability for bigger money to start to take positions. And if we're still trading up here into that, I think the lows might be in. I still am in the camp, though. Let's be clear. I'm still in the bear market camp. I still think this is a run-of-your-mill bear market rally, and I still think we'll make new lows.
So we had Jeff Ross on yesterday, and he kind of alluded to this whole movement that he's been looking at, which is the liquidity aspect. Bleeding liquidity last quarter of last year, third quarter. Now we're starting to see some correction in liquidity. And his whole situation was that liquidity could be opening up. You look at that along with the Dixie, the dollar, starting to continue to stabilize on a downward trend here, which could indicate people are looking for an opportunity to start putting money into something. What is your thought on that approach right now?
So I think that's a valid approach. I mean, again, I don't think that alone has the ability to make sure that a low pivot is in. I still think there's overlying circumstances, like if you see the stock market collapse 25% in 2023, it's hard to imagine Bitcoin's not going to come back down and retest those lows. But for me, certainly, I mean, you start to see a weakening dollar, that helps. Gold price has really soared recently as well. That's telling you people are definitely looking for an alternative to US dollars. And in many ways, I think to stocks. I mean, I think there's this growing realization that the economy will go into recession in 2023. And what does that mean for earnings for stocks and the valuations as well? So I think, again, Bitcoin is the one that people are going to go to if they're going to choose a crypto. And I'm not surprised to see that accumulation going on.
Yeah. We're going to get to the Ethereum chart a little later in the show, so make sure and stick around for that, guys. Also, if you like these kind of breakdowns when Gareth comes on the show, breaking down what he thinks is happening on Bitcoin, make sure and hit the like button. I want to get into the S&P and a little bit of what's happening on Wall Street in general. This was just Wednesday's, one of the lead stories out there. Stocks giving back some gains as we saw a little bit of shedding there within the Dow at 400 points right now, losing a bit of steam. So the question I have is, when you look at some of the market, especially because in many cases, traditional markets bleed over and it does cause a little pain in the crypto markets. They kind of work hand in hand. The ability to see some of these tech stocks continue to trend down, what are your theories around right now the tech stocks? Let's just take a look at Meta, for instance, as a good example. Where do you see Meta rolling out as it's going right now?
Yeah, so let's take a look at the chart on Meta and see what it's telling us here. And again, one of the things that catches my eye on Meta is that we've been in this down-sloping trend line here, and we finally broke above it right over here. And again, for me, this doesn't mean we're in a new bull market for Meta. It just means there's a floor in price, meaning that this yellow line now becomes technical support. So for me, at least, what I would be doing is looking for a pullback into that level, which right now is around 113. And I think that's a buyable level on Meta. Now, again, I think Meta is kind of a unique case because it was already pounded down so much going into this kind of bear market. We saw it, obviously, it's corrected immensely over the last, basically 18 months or so. So I think the better case to look at for stocks is let's take a look at Apple. And this is a concern for me on Apple, right? So if you look at this bigger trend line that goes back to 2020, look at how price kept hammering and hammering and hammering, and then it broke. And if you look at where the market was when it started to reverse today, Apple was piercing that level, which again was support over here. It's now resistance. So it slammed into that and got pushed back down. And oftentimes when you see this chart set up, the resulting move is a move down like this. So again, for me, if I'm looking at the S&P 500, I'm also very concerned because you have this down sloping trend line, and look at where price was just into today's sell-off, right into this down sloping trend line. So for me, I'm expecting as much as a 25% drawdown in the S&P in 2023. And that's one of the reasons why I think it's going to be hard for crypto to really hold on to its gains if we're seeing that type of drawdown in stocks.
So with the drawdown, obviously leading into the FOMC meeting next month, we're going to get a chance to see maybe a little bit of a hand being played by the Feds as to whether or not we'll start to see some either pause or slowdowns in terms of rate hikes. With all that being said, let's say we get the rate hikes to essentially kind of pause and or slowly curtail throughout the rest of this year. You also look at the drawdown potentially with the traditional stock market and over here on the crypto and risk assets. Or do you feel at that point, where would you be looking? Because both of those markets would be in a position of really a high volatility, not necessarily tradable. How would you go with that?
Yeah, and that's a tricky thing, right? So my forecasts are saying that the Fed has one or two more rate hikes in them, probably both 25 basis points, and then they're done. And we saw some economic news this morning that was very, very weak. It does portend to show a recession on the horizon. We just haven't seen the jobs market catch up yet, and I think that's going to be one of the realizations for the markets. Now, initially, you're going to see investors cheer because the Fed is going to go back to a neutral policy, which means they're not hiking, but they're not dropping. I think that ultimately the market in the second half of the year is going to start to get very scared over the aspect that inflation remains above 2% and the Fed cannot stimulate even in a recession, right? So if we slip into this recession, my fear is it becomes a long recession, a multi-year recession, because the Fed's not bailing us out due to inflation staying slightly elevated.
Yeah, it's interesting because we're I think for the first time I started to see some analyst kind of leaning a little bit more toward a neutral position versus a bear position. And I was surprised. We've started to see a little bit of that indicating right now. So for you, saying that we still potentially have some pretty tough times ahead of us is going to be interesting to watch as we see the year
and I think,
play out.
Paul, I think one of the things to recognize too for investors is that while the markets have declined historically, if we look at bear markets, this isn't that big of a decline. The S&P is not even down right now 20% from its all-time highs. And remember, the move from 2009 to these all-time highs, or from the COVID low to these all-time highs, was probably the biggest move we have almost ever seen in the stock market, at least reminiscent of the dot-com bubble move up in charts. So I do caution people that at least in the very least, you got to think we have to head down to that February 2020 high, which was just before that COVID collapse. In the very least, that kind of is the removal of the liquidity put in during COVID.
Yeah, man, that would be absolutely wipeout of some major wealth for sure if that does occur. I want to talk about two more stocks, and then we're going to jump over to Ethereum and play that. We also want to take a look at Solana before we bail on you. But Disney, now trading at an 8-year low. This was just a quick chart here on some of the price share performance. Disney, a lot of things happening. Obviously, Iger now back in the helm. We've seen good things, bad things, both from an aspect of this stock. Where do you see Disney playing out this year?
Yeah, so for me on Disney, it's kind of stuck in this little bit of a range, and I'll flip my chart on here just to give you guys a sense of what I'm seeing is. So number one, you can see that when we bottomed out recently around $83 to $84, there was this long-term trend line going back to 2013. And you can see how it tags the COVID low. And then what price did we just hit recently? We actually hit that low right there as well. Now the bounce has now taken us into this down-sloping trend line, and we're battling against that. Now, if we can break above that, that would be a very good positive for Disney. But again, we haven't really done that yet. And so the question is, as these two lines converge, and remember, one's slightly upsloping, the other's sharply downsloping, they're going to converge probably in the next 3 to 6 months. Price is going to be forced out of the range one way or the other. If you break out, I think you're talking about a move back to $130. If you break down, that's the more scary scenario where you could be headed to 78 and then potentially down to about 68. So it's a tough one, to be honest. When you're in a wedge patterns are notoriously tricky for figuring out which way they're going to break. But when they do break, there's usually a major move in that direction.
Yeah, I think with the situation with Disney, Disney Plus has not necessarily been an absolute winner for them. They've got a lot of, scenarios that they've got to correct in that. So we're going to see a lot of fundamentals change up with Disney this year. But if they fix it with Iger at the helm, there could be some fundamental changes within how that stock reacts. So it'll be a good one to watch for sure. Let's jump over to NVIDIA. So some fairly decent earnings and revenue growth forecast on NVIDIA. Still kind of trending up, even though they're looking at all the way into 2025. NVIDIA making some big moves into the space of their kind of metaverse play, what they're doing in the automotive market. A lot of things happening there. What do the charts show for NVIDIA?
Yeah, so charts are now a little bit short-term extended, and I'll flip them on here for us to take a view at. So short-term, we're at this little level here. We peaked above it, and now we're coming back in today. So this is a very pivotal level around this 174 to 175 level. Now, if it can get through that level, I do think it has some decent upside to about $210. And again, that would bring us back to this area right over here, which would be significant resistance. But again, for me, I'm looking at the bigger question. And the bigger question is, if we head into a macro recession, like a recession for the whole economy, is that already factored in NVIDIA's stock price? And I'm not so sure it is. Again, if you look at the longer term here, there's some pretty significant downside levels that we still may need to get to. So again, I would be a little bit on the careful side here. The one positive, if I can, I'll make a very good bull case for you guys out there. Let me get rid of these trend lines here. So if you want to look for a pattern that has a very good breakout ability, take a look at this inverse head and shoulder pattern.
Yeah.
Now, again, what does this mean? Well, if this head and shoulder neckline right here breaks, you could get that move up, which again could be north of $200. The break point on NVIDIA would be about $185. So look to see if it can get through 185. Again, beautiful inverse head and shoulders there. It doesn't matter that it's forming. Please understand that, everyone watching. It's only a matter of, does it break out? If it breaks out, it's game on. If not, be very careful.
Yeah. Okay. So interesting point there. I like the kind of the scenario that you're playing out there with NVIDIA, because there are some scenarios that, from the chart standpoint, that it looks pretty intriguing to watch, but yet cautious, erring on that side. Couple of things. We'll move over to a couple of crypto projects. Some news in from WEF. This is, of course, XRP. Brad Garlinghouse jumping in saying, hey, we could see a lawsuit settlement finally in the first half of 2023. But I don't know. He's kind of been talking about this for a bit, so I'm still questioning XRP long term here as to whether or not we get a good result. As far as the chart right now, where does XRP stand for you?
Let's take a look here and see. So one of the things I've noticed about XRP is that we've seen a lot of big moves up in crypto, but XRP has not had a huge move considering some of the altcoin moves, right? I mean, if you look at a Solana, an Avalanche, even a Cardano has had a very significant percentage move up, while you're pretty much stuck at under 20% move up in XRP. Now, like you said, I think the reasoning for that is that there's a lack of buyers. They're waiting to see what the outcome of this judge's decision is, and they're not willing to put big money behind it, right? So I think that's kind of alluding to that aspect. But one of the things I'll be watching for is you have this pattern here, this little wedge pattern, and we're stuck between support and resistance, basically resistance being around 42 to 43 cents and support being around 34 cents. And so I'll be watching very closely to see, can XRP in the next week or so break above? If you get a breakout going into the judge's decision, maybe it implies that there's someone that knows something, that it's going to be a positive decision, and that could be a positive signal there.
Yeah, yeah. This is going to be one to, I think, really keep a close eye on, because we've been watching XRP so heavily. I want to get into Ethereum, because Ethereum had some significant moves over the weekend. That was obviously tracing against what was happening with Bitcoin. Actually did a little bit better performance-wise. What are your thoughts when you look at ETH right now?
Yeah, so ETH has had a great move up. Same kind of issue though here as with Bitcoin, right? Here's your kind of pivot high just before the FTX kind of debacle occurred, and we see that big drop. And notice how price has gotten up there and is just having so much trouble getting through that level. So for me, I'll be watching this approximately $1,650 level, $1,650 on Ethereum. Again, I like the fact that it may be consolidating in a bullish manner, but it is still technically extended on the chart, and it still needs to kind of digest this move up before I get more confidence that it can break out. But again, I think one of the things to keep in mind, folks, is that, for me, it's the best of breed. So Ethereum and Bitcoin, if you're going to hold crypto into kind of maybe regulation or whatever it may be, those are the ones to do it with, because I do think they'll survive and thrive in a post-regulatory environment. The other ones I would just be generally cautious on. They're more for allocating the proper amount of investment, so that if something does go wrong, such as an FTX or something else, you don't get hammered too badly.
So with Ethereum, Do you feel like we see a 17 before we see a retracement back down to 14 right now, based on what you're seeing in the charts itself?
That's a really tough question. So again, right now, I honestly couldn't tell you. I don't know if they'll pop it up to touch that 17 level or pierce that 1650 before they bring it back in. We did see a little bit of selling today. There was, I think, a DOJ announcement about a crypto player out there, but it didn't turn out to be anything major for the crypto industry. So price has come back up. But I still think that we are short-term overbought. And I do worry that if the stock market, which is down pretty decently today, if we start seeing spillover where that market goes down more and more, I do think it bleeds into crypto and brings crypto in.
Sure. Yeah. Hey, Gareth, when you're looking at the charts, this is something that, we try to do here, especially around ETH and Bitcoin, the comparison. Typically, they're tracing fairly well closely in comparison to growth. What is an indicator for you if Bitcoin were to hit a 25K marker in some way through whether it's this bear market rally? Where do you feel ETH would kind of move at that point with just kind of the scenarios we've been watching, which has been pretty much a power play on ETH's behalf?
Yeah, so both are creating potential bull flags. Again, it's still tough to know because they're both extended. But if we were to get up a move on Bitcoin, let's say to 25,000, I would dare say that Ethereum would probably at least test 2,000 on the charts, maybe even slightly above 2,000. So again, that would be, by the way, if you get to the 2,000 level, that's your August 22 high pivot right above 2,000 on ETH. So that would probably be where I would be looking for it.
Yeah. Last chart I want to get from you, of course, is Solana. Now a little bit more exposure here on DCG and Genesis going into bankruptcy potentially. At the same time, we've also seen Solana make a major retracement here from its low around $8. What's your theory on this one?
So, I have a soft spot in my heart for Solana. I know a lot of people like to hate on it, but I do think the technology, it does warrant more attention. For me, I think, this is something I was asked about over the last month quite a bit going into the end of the year where it was trading down towards $8. And I kept on saying to people is like, listen, with the ability to do 50,000 transactions a second versus, whatever Ethereum can do, which is a lot less, there is a fundamental need for something like a Solana. But you have to realize that if you invest in it, you have to invest the proper amount, meaning that if you're buying it at $8 or $10, you have to say, hey, listen, I could lose $8 or $10 on this, but it could also 10x. And so there's a kind of a give and take in terms of how much you invest, where you say, okay, I'm willing to put 1 or 2% of my portfolio in this to take a shot, knowing that maybe I'll make 10 or 20 or 30% back on that 2%, but I could also lose that 2%. So it's a calculation there. But overall, I love the recovery here. I think for me, the big level that this is going to have to test is this level right down here, right? If we look at this low, it just kind of goes right across from all this consolidation where we broke down. And if it can reestablish basically north of $27, that would be actually very, very bullish for the chart longer term.
Yeah, that's one we're watching closely for sure. Gareth, always fun getting you to break these down. Let's take a look at our poll today because I want to see how the audience responds to this. What'll happen first, Bitcoin 23 or Bitcoin to 19.5? So everybody's coming in with a little bit more bullish indicators. 65% saying 19.5. You agree with that one today?
Well, I like to go against the crowd, but in this situation, I'll take 19.5 first before 23 and change.
There you go. Well, that's an easy one, I feel like, because we kind of nipped into low 20s there today. So if we get a little bit more pressure, obviously, as you mentioned, from the traditional markets, that could be one of the bleed over effects that really could flow into this. Gareth, always fun to talk to you and always love to get your charts, so it's a good one. If you guys want to learn more about what Gareth does, make sure and check him out over at inthemoneystocks.com. We'll leave a link below in the directions. So anyway, good to have you on the show today, man.
Thank you so much, Paul. Take care.
All right, take care. All right, so guys, listen, we're doing these live streams. Typically, we try to do the 3 o'clock. If you're listening in on the podcast, maybe after this show is done, jump over here to the YouTube channel. This is the place where you can catch all these charts, a lot of our analysis, deep dives, when we bring traders like Gareth Soloway on the show. We also do a lot of deep dives with project leads and a lot of analysis. We've got John Woo coming on the show tomorrow. Be watching for Lynn Alden who's a great macro analyst that we just did a recording with her. We'll drop that video in for you guys. So lots happening on the show and the network here this week. So stick around. I think we're going to see a lot happening throughout the market. But just remember, you know, as I always say, is just caution always, especially in these zones, helps you be able to kind of look at being able to understand where this market is going in the future. So just be a little bit more cautious out there. If you guys want to catch me, it's simple. It's out there on Twitter @Paul Barron. We'll catch you next time right here on TechPath.